Liverpool's hottest frequency with Connection and Mboma Shida.
So often we hear about how investing in property bonds is one way you can make money from property without necessarily owning any property. But what does it even mean? We are joined in studio by broker and owner of REMAX, Philip Skuman. Morning, Philip. Are you good?
Morning, guys. Thanks as always for having me.
Good. So what does it mean to invest in property bonds?
So, well, firstly, we gotta speak about investing in general and how you're supposed to compare apples with apples.
Mm-hmm.
So, when you, for instance, putting your money in your bank account, you earn a fixed interest rate.
Yeah.
If you put your money in Apple stocks, you're gonna have a dividend which is going to equate to a certain percentage per annum based on what you've invested. So we can all take this back to percentages per annum. Now, real estate investment trusts have a decent yet low, yield, depending on who you are and what your portfolio currently is. If you're a newbie, and this is where you would usually use a real estate investment trust or a property bond, you can't afford to buy a property fully outright yourself. You don't have money for transfer fees, you have a bad credit record, the bank doesn't want to finance you, but you have 10, 20, 30 grand. Okay, you want to invest it in property. You can't buy a property yourself with that kind of money. But you can buy a share in a real estate investment trust. Okay, and that will sort of like work like stocks. You bought Apple stocks and you get a dividend, a yield at the end of the year. The problem with real estate investment trusts is it's an easier barrier. We spoke about what is the most difficult thing, in property is probably the barrier to entry. So the nice thing with a real estate investment trust is there's a very small barrier to entry. It's easy for anybody to do it. The problem is that because I think your next question is on inflation. So the problem is if inflation is, and Stats SA will tell us it's 6%, it's not. We know prices are going up way faster than 6%. The tune is about 11% that you need to try and beat for you to actually grow your wealth. So if a real estate investment trust is only giving you 6% and inflation is 11, or even if it's 6, you're still not making money. You need to grow faster than the flat rate inflation. So I would always say that buying a property outright yourself is better. But if you can't afford to enter the market, real estate investment trusts or property bonds would be what you buy.
Do I have the option of topping up?
Yeah, you can keep adding. It's like a savings account. You keep buying shares. At some point, I would say, listen, okay, let's say you got 200K in there. I would say, let's sell the share and then buy our own property. That going forward. So I would say it's a good start, but it never would be, for me, the end game. A guy that's got multi-millions and has people looking after his investment fund, those are the guys that go for 6. But he also lives in a country where his inflation is 2%, so you've got a net wealth growth of 4. That makes sense. The problem that I've got with real estate investment trusts as a whole is the fund managers, they buy and they're trying to secure big properties, okay, because it's smaller, it's less work. I mean, you go and spend me 300 million, buy property for 300 million, you're going to be busy. Unless you buy a mall. That's one transaction. The problem with malls, and if we look at our current economy, is that the kind of stuff they're investing in is the kind of shit that ain't performing currently. Malls, for instance. Polokwane is down. We've spoken about this. Why? Because people aren't coming to Polokwane spending their money on the weekends anymore. They're going to Lebo Mall, they're going to Leboahomo Mall. Everyone's got their own mall now, and everyone's suffering because of it. And what do? We need more investment. We've got more investment money. Let's build another mall. So what we do is we actually giving people too much money. They don't know what to do with it. They build more malls, which is what the country doesn't need. You get what I'm saying? So that's a problem in general that I've got with the real estate investment trust. But for the individual, I think it's always a good way to start with property. Look at your yield, but it's the same as any other stock then. Real estate investment, it's just based on the real estate performance, whereas Apple stocks are based on Apple's performance. Microsoft shares are based on that. So it comes down to the same thing.
All right, I think you've run down through like the pros and the cons and even touching on inflation. Just to wrap up, maybe recap in terms of if someone is thinking about this and saying, I can't buy a property right now, but I am thinking of property bonds. What do you say to them?
I would say go for it. Investing is always the right answer. Even though you just make 6, and inflation is 11 or 12, you still didn't lose 12 because of inflation. You just lost 6 because your money sweated. Your money must sweat, and that's the reason I would say. Don't put it in your bank account not earning interest. Just put it in a real estate investment trust. Start earning interest a little bit, to make your just make your next step a lot easier.
I'll take it from there, knowing that is not the end goal. All right, thank you so much, Philip Seeman, broker and owner of REMAX.
Stop,